Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over option strategies. And so in this video, it's going to be a little different than the other ones. I'm just going to go over how to sell covered calls. And this is something that I do on a weekly basis fairly passively because I'm at work during trading hours, Monday through Friday. So I can't actively do this. So I basically set orders before I go to work on Monday, and hopefully they're filled. And I should say that with that, I am pretty passive with this, so the orders typically are filled. I could make more money with this if I was more aggressive, more active, but I can't really do that because of work. So this is just the strategy that I use, and it might be helpful for you. And so basically, in order to sell covered calls, you first need to have 100 shares of whatever stock or ETF in order to sell a covered call. It also has to have an options table. Some stocks don't have options. And The way that I like to do this is I like to go for strikes that are above my average price because, if the options end the week in the money or above the strike price, that means that I have to then sell those 100 shares at that strike price. And if I'm going to do that, I'd rather sell them at break even or after making some profit. Ideally, these strike prices are not hit, and then I can just repeat this every week. And this ends up working out pretty well for me. And actually, last week, so I should note too that I'm recording this on December 10th, Sunday. So these prices, the things that I go over in this video, should be relevant for Sunday going into Monday, but these examples should be useful for any week. And I should note too that last week I actually made over $200 selling covered calls, largely because GameStop was pretty volatile the week before, and so the options contracts had pretty nice premiums. And with that, I was able to make a good amount of money that week. This week, it's not going to be as great because the volatility's kind of died down, but it's still money, for holding shares. So I think it's great. And then I do have it in pink here. If the strike price is below my average, or just to get, a better sense of the direction a stock might go in during the week, I like to check max pain because that gives me an idea of what the ticker prices will be at the end of the week. And as I had mentioned, I place these orders before Monday open, before I go to work, so I don't have to worry about them or think about them during the week. And then I do have 4 tickers listed right here. I'm going to go over placing covered calls, just giving examples for these 4 tickers, and I will break this video into chapters based on these tickers, so you can skip to the one that's of most interest to you. And you can also comment below to let me know if there are other tickers you'd like to go to learn how to do covered calls on, or if a different platform. And so for this video, I'm just demonstrating using Webull. I could also do Robinhood, but really, it's the same in either platform. Any brokerage that you use is just going to be a little bit different format. So hopefully this video is helpful for you, whatever platform you're using to trade with. And so to start, I'm actually going to go over just a table that I put together based on these 4 tickers and strike prices, whatnot. And so that is right here. And because he's not blocking anything, I'm going to bring Ed back. And so looking at how to sell covered calls, this table, I'm going to go over the 5 columns here, with the first one in the left with the ticker, so the 4 tickers that I had just listed on the previous slide. And for these, as mentioned, you need to have at least 100 shares. The strike price, this is effectively the price that I would not want to sell lower than. If, for example, with Boyle, if it closed the week above 37, my average is slightly lower than 37, so I'd be fine to sell them at that price. But I prefer to hold them longer, so ideally the week will BOIL will close below 37. So then I can repeat this the following week. And so, yeah, so the strikes are there. Those are the ones I'm going to go over with you guys. And then the limits. So that's 20 cents for BOIL. But really, with that, 20 cents times 100 for the 100 shares results in a gain of $20, minus like a 4-cent fee, something like that. But yeah, so this week, if these are all of the positions I want to sell covered calls on, I'd potentially make $36 with this. And so, yeah, I mean, I again feel like this is a really nice strategy to make some money on the shares that you hold. And yeah, so I'm first going to go over BOIL, starting with looking at max pain, and then we will jump into the options table so we can do a strike of 37. So I'm just going to remove this slide for a second so we can see the maximum-pain.com window with BOIL there with the maturity of December 15th, so this coming Friday. So if we just scroll down, this is the chart that I always use to gain the understanding that max pain for this week is 36, which you can see right. Let's see if I can highlight that. I can't highlight that number, but you can see where the cursor is, 36 right there. So that does suggest that price will be going up. But I do also want to note that if we look at the max pain for December 22nd, the following Friday, max pain for BOIL is 32. So that is suggesting that price may not be up for a long period of time. And so in that sense, selling covered calls can be a little bit risky. If it does go up to 36 and you want to sell, then you can't. You have to wait until after Friday, after your contract has expired, and then you could sell the following week. But anyways, with the assumption that max pain, the maximum closing price for the week will be 36, we can then go over to the options table from looking in Webull. And so this is based on just the chart tab over here. I've gone over the chart in previous videos, then just click over to the options tab, and then we have this nice options table. And so I want a strike for December 15th of 37, and we can see the bid price is 20 cents, which is $20. 20 cents times 100 is $20. And so that's what I want. And so if we look at the slide I just had, that is correct. 100 shares at a strike of 37, limit of 20 cents equals $20 profit. And so it is possible, though, that, if we look at the chart here again, if, BOIL trading at right around 30, if it were to shoot up to 36, that 20-cent premium, which translates to a $20 profit, that would go up so that you could then potentially be missing out on gains. But, but doing this, Monday before open, it's like, well, I know that the order will be filled. I don't have to worry about that. I at least make $20. If it goes up to 50, it sucks. I miss out on $30, but if it doesn't go up, if it goes down to 10, then, you're missing out on a $10 profit there based on the difference of 20 minus 10. So, that's a strategy that works for me. If, I should also note if price, let's say, goes up to 45, then I would be missing out on the gains from, between 37 and 45, which, would suck. That's a lot of money that I'd be missing out on, hundreds of dollars. But I would be getting out of my position above my average. So that would be better than, selling at a loss. So yeah. And that's just what I found works for me. So for this, $20 profit for holding 100 shares of BOIL, that's great. But I should also note, I actually don't have 100 shares of BOIL. I was hoping to get up to that number this week, but price, didn't go down as low as I thought it might, and I just didn't have big enough orders placed. And so, potentially I will do that in the future. But for now, BOIL is just kind of an example for this video. And then so if we look back at this slide, next I'll be going over GameStop. For me, I don't want to be selling at a price lower than $22. So we'll look over at the options table to look at GameStop. And so looking over here, here's the chart. I did just make a video saying that I think GameStop's looking pretty bullish. So, I do think that, it's possible it won't be this week, but I do think that GameStop, especially looking at this RSI, is set up to, go higher. But, yeah, I mean, if it does go higher, you could potentially make more money with the options. But, I keep forgetting Max Payne. I got to go over that first. So looking at this tab here, GameStop for the expiration of December 15th. Scroll down. The Max Payne is $15. I don't think that a strike of 22 will be filled, especially because, we need to break above 18. But, so I don't think I'll be selling my shares by the end of this week. But, I could potentially get more premium for this. And so let's see, $22 right here. The bid or the sell price is 8 cents times 100. That's $8. But if you wanted to do, let's see, I'd have to adjust this to have more contracts. You could even do a strike of $28 and you'd make $2 with that. And so you would only sell your shares at $28 if the closing price on Friday, December 15th, was above $28. But yeah, for me, I'm going for 22. And I do have shares of GameStop, so that is something, that I will be doing. And then, let's see, I'm going to switch to Max Payne so I don't forget this for the next ticker, which on this list is ChargePoint. I also did make a video suggesting that ChargePoint chart is looking pretty bullish. So I do have concern that for this week, a strike of $3 will be filled. But while ChargePoint was down, I definitely went in heavy on the position. So I have more shares than I'd prefer to have. So if I did sell some at $3, that would be fine, but that would be at a profit for me, a small profit. So I'd be fine with that. And so now, looking at Max Payne, let's see what that is for ChargePoint, maturity of December 15th. Scrolling down, we can see here that it's $2.50. So now switching back over to Webull and looking at ChargePoint, first going over the chart. I feel like this gap right here will be filled. I think that everything is looking like the price is going to be going up. At least that's how I feel. Looking at this with gaps to fill, to the upside, $3. I could be selling at that price, which is fine. That's better than selling at a loss because I was able to accumulate so many shares while over here. So now looking at the options table, I'm actually going to switch this back to, let's see. In case I have to zoom in on it, I will reduce this. So a strike price of $3, expiration December 15th. That would yield me 3 cents times 100. That is $3. And so let's see if that's what's in the table here. Yep, you can see it right there, $3. So, I'd be happy to not only sell 100 shares of ChargePoint at $3, I'd also be happy to get $3. But, I'm also kind of want to be cautious if it does close above $3 this week on December 15th, I could maybe sell some with a strike of $3.50, and I'd make only $1 on that, 1 penny times 100, $1. So yeah, that is an option there, options. And yeah, so for this example, $3. Strike price would yield me $3, so that's nice. But if price does go up to, like at its current price of $2.35, if it goes up to $2.50, these contracts, at least at the beginning part of the week, the premium will be more, so you could potentially make more than $3 on it. But for me, I just like the order to be filled right when market opens on Monday, so I don't have to worry about it. I take the money And, I'm happy about that I'm actually making some money. Okay, and so now I will go over the last one. Let's see, which is here, BIOR Therapeutics. And the reason why that's red is because I think it might actually be tough getting the limit fill at 5 cents, because for this one, it only does 5-cent increments, and also it's monthly, not weekly. So there are fewer options. And so I think this is less likely to be filled. But, I can place the order and maybe it will be filled. And so I'll go over some options with that that might be useful. And so here's the table. I'm just going to switch over to BIOR, going over the chart. Pretty low right now. And so, we'll see where it ends up at the end of the week. But first, I'm going to go over to the max pain for BIOR for a maturity of December 15th. If we scroll down, there's actually really not that much data, just because price is a lot lower than $2.50. So, I don't really think price is going to close at or above 250, so there's very little risk this will close in the money. Okay, so we look at the options table. So for, let's see, December 15th, we got a few options here. However, the bid price for them, basically what I would get for premium for all options, is $0, so it's unlikely to be filled. Even if we look for the next month, January 19th, and so what could be done, whether it's for the strike date, the expiration date of December 15th, or the expiration of January 19th, an order could be placed with a bid price of 5 cents, translating to $5. And, maybe that will be filled, maybe it won't be filled, but you just place the order and, hope for the best. And so that's what I do. So I don't really expect to be getting $5, at least not for the contract expiring at the end of this coming week, December 15th. But, perhaps for the January 19th, that expiration of $2.50 might be filled for $5. But, maybe I won't get that $5 this week. Maybe it'll be the following week if BIOR gets some volatility back in it. And before I close this, I do just want to go back to the chart for BIOR because, if we look at the 4 hours, there was all of this volatility during the after hours. And so following that, last week, I was able to sell some covered calls for BIOR because of this volatility. Since it's died down a little bit, there aren't many, options contracts like that can be filled to sell a covered call. So at this point, BIOR is not really that exciting as far as selling covered calls, but you can place the orders and forget about it, whether it's Monday at work or just over the course of weeks. Just wait for those orders to be filled. And so, that is, let's see here, coming back to this is basically, my strategy for making small profits, $36, approximately that, every week. And like last week I had mentioned, I made over $200 doing this because of volatility in GameStop. I suspect there will be volatility this week with ChargePoint. If it does close at $3, I'll have to sell some shares at $3. If it closes above $3, I'll have to sell them again at $3. So I don't want to sell all of my shares at $3. So I might be picking, strikes of $3.50 or $4. And if those do get filled, I make a little bit of money. And then I just continue to hold those shares until, those strike prices are hit, closing in the money on Friday. And so, that is this video. If you found it helpful, make sure you like it, share your comments in your thoughts in the comments down below. And, if you have any questions, I'd be happy to do a follow-up on this. Sorry, I'm a little bit disorganized with this. It's just a lot of information. But I think selling covered calls is a great way to make a little bit of money. And, it takes a little bit to get used to it. But, I found it to be, a nice way to make a little bit of money every week. And so, on that note, thank you so much for watching. And, let me know in the comments if you have any more questions. Happy to clear this up or anything up and do a follow-up video. So, thanks a lot for watching. Take care and happy trading this week.